again. I'm Gerard Vecchio, Managing Director at MarshBerry. On today's ViewPoint, today we have Brady Kelley, Executive Director of WSIA, the Wholesale and Specialty Insurance Association. Welcome today, Brady.
Thanks, Gerard. Thanks for having me.
Appreciate it. Appreciate you being here. So we just wanted to spend a couple of seconds on your recently issued report from the stamping offices and probably wrap up with a little bit of your outlook going forward to keep this as our topics today. So as we all well know, in 2021, the surplus lines market performed very well. So what is the stamping offices seeing in 2022 with regard to premium growth, unit growth, and the like, Brady?
You know, they're seeing continued growth, Gerard. To your point, we saw the stamping offices report premium growth of 22% in 2021. That was the full year, reaching a record $41.7 billion amongst those 15 states that write surplus lines premium. Through the first half of 2022 compared to the first half of 21, surplus lines premium was up 32.4% in those 15 states, again, in aggregate. But 32% is growth we haven't seen for quite some time. They noted filings of about 2.8 million. So those are up near 10% for the first half of 2021. But no doubt the market is growing at a record pace right now.
Great. And I noticed too that there were some higher numbers recorded, particularly in like Texas, where they said that the premium growth exceeded $1 billion for the first time in their history. And obviously, Texas is one of the top three states, California, Texas, and Florida, in terms of the E&S volume. A surprise to you, or what you would have expected?
Maybe not a surprise to me, because I think I saw them report every month a record level of premium. I think we're seeing a variety of feedback from the members. I mean, there's no doubt our market is busier right now than I think it's certainly been in my tenure. Submission rates are very high, and the influx of business is significant. A lot of cyber, we've got property values changing, payrolls are up, a lot of things contributing to basically insured covered, the basis of insured coverage. And a lot of that flowing into surplus lines right now.
And I think it's the combination, correct me if I'm wrong, of both premium exposures going up as well as rates going up. Clearly, there's been an explosion on the cyber side of various claims and whatnot that's driving, and the realization that cyber is not going away. It's really in all corners of our society, unfortunately, and we need that kind of protection. But we're also seeing, and I noticed that while units, as I call them, were up in the 10% range, total premiums were up in the over 30%, implying to me anyway that rates continue to grow at a pretty good clip. Am I safe in assuming that, Brady?
I certainly think you're safe in assuming there's rate increase in pockets, certainly lines of business that we're seeing rate increase. I'm hearing of rate increase, but it's hard to generalize that, across the board, because there certainly are lines that some members are saying certainly aren't hard market lines. But no doubt, on average, we're seeing some rate increase in certain lines. You mentioned cyber again. I feel like we've talked about cyber forever. But cyber not only becomes to be more prevalent, the risk is obviously more well known, but it's evolving. It continues to evolve. The risk continues to evolve, and so the types of products our members are writing continue to evolve with that, and pricing changes along the way. So a lot of things going on to contribute to that higher premium increase than you see in the volume increase.
It really talks to the value of the E&S surplus lines marketplace, because at least in my tenure, which now is 35 years in this industry, in my tenure, the evolving risks inevitably are covered first and foremost. in the surplus lines marketplace, and sometimes they never move from the surplus lines marketplace. Would you say that, you've seen something similar as we have, continued to evolve in this digital age?
Oh, there's no doubt. Let's stay on the topic of cyber. I remember as a CFO, gosh, now 20 some years ago, trying to procure a cyber policy for the first time, and it was not available anywhere but in the surplus lines market. That evolved in a couple of years where we were buying that cover from a standard carrier back at that time. But again, that risk has evolved. I think thinking about the entity that I worked for at the time, I'm sure their risk has flown in and out of that market simply because that risk continues to change, and appetites, the ability to underwrite that risk continues to change. So no doubt there are ebbs and flows. I can't think of a product that has started in surplus lines in my tenure that has stayed there. I think about flood, when the NFIP was kind of reformed so that the private market could start taking flood policies. Boy, a lot of that came straight into surplus lines because there were no standard solutions for it yet. But that's changing. You've got a lot of standard carriers now offering alternatives to that federal flood insurance program. So no doubt ebbs and flows over time, and we expect to continue to see that.
But it does point to the net need and the growing need of the surplus lines market to capture and properly cover these evolving risks.
Oh, there's no doubt. I would oftentimes say our market really does serve as the kind of incubator, the innovator of the coverage that, over time, as losses develop, intelligence on the product, underwriting expertise develops, those certainly do flow into the standard market. So we are a critical piece of ensuring new things, and that will continue to be the case.
So as we look out to the balance of 2022, specifically with regard to the stamping offices, what are you seeing? What are you hearing from your constituents as to what happens over the next 4 to 6 months?
I think the market is again as strong as it's ever been, as busy as it's ever been. I think that the members continue to talk about really high submission rates. Nobody is suggesting at this point any concern that growth we're seeing doesn't continue through the balance of 2022. So we're certainly expecting a very strong year end for this market. If there's any measure in terms of the association measuring interest in this space, it would be our annual marketplace, which is coming up in a couple of weeks in San Diego. Nearly 6,200 attendees right now, Gerard.
Wow.
And that's up from 5,049 to be specific back in 2019, so pre-pandemic. That is dramatic growth, and I think it's certainly a sign that this market is the place that folks want to be, and it's a very strong performing one right now.
Well, just as one more indication of the continued growth and interest in the marketplace, as most of our viewers know, I co-head our specialty unit. And what we've seen relative to the retail market on a percentage basis on the M&A side is that MGAs, wholesalers, program administrators engage in M&A transactions more than 3 times as often as retail brokers, not on an absolute number, but relative to their market sizes, meaning the number of retail agents is 10 times the number of specialty, and yet specialty relative to the size trades 3 times as much. So it really does talk to the health and viability of this marketplace.
Agreed.
So with that, Brady Kelley, Executive Director of WSIA, I want to thank you again for taking time to be with us and explain the health of the marketplace. We look forward to seeing you at your annual marketplace, September 12th to 14th in San Diego. Thank you very much, Brady. Have a great day.
Hey, you too. Glad to hear you're going to be there and look forward to seeing you there, Gerard.
Thank you. Thank you all. Bye-bye.
Bye-bye.